What is the next gold in terms of growth potential? Well, our next guest thinks it could be metals related to the electrification of the economy. Peter Grandich, founder of Peter Grandich Co, is back with us. Peter, our viewers have asked for you to come back ever since you appeared on our program again last summer. So I'm happy you answered their call. I'm happy you're here today. Thank you for being here.
Well, thank them. And it's really my pleasure to be here, David. So I look forward to this.
Thank you. And Peter, let's talk about the calls that you've made over the years. We'll start with that. As you know, gold has had a tremendous run. We've talked about this last summer. You had made the correct call to go pretty much all in on gold in 2018 when it was around $1,200. And of course, we saw what happened to gold in the subsequent years. Walk us through that call. Walk us through your rationale of going all in on the yellow metal a couple of years ago.
Sure. I'll start right after when my wife said, I think you're crazy. And I decided to sell most of my general equities and put it mostly in physical bullion and mining shares at that time. At that time, it was difficult, almost like I called the Maytag repairman. It was very lonely to be a very avid bull. But needless to say, we caught the run mostly up to the 2000 level, bailed out of, came back in, but focused more on the mining shares than the physical bullion these days, simply because I'm not in the camp of $5,000 or $10,000 gold. I do think it can get to 22, 2,300. That's always been my target. And from this point on, while that be a 20, 25% move in bullion, the mining shares now and the leverage that they offer, particularly to producers, seem to have much more upside. So for me personally, I'm much more overweighted in the mining shares than physical bullion going forward. And I really think we're seeing the last of the correctiveness of that semi-parabolic move we had in the summer that took us, to almost adjust it for inflation, new highs. They weren't all-time highs, but they were almost there. So I think we're going to revisit them as early as the latter part of this year or no later than next year. And there, the mining shares are going to offer more opportunity, in my view, than the actual physical bullion.
So, Peter, I'm wondering if you think that gold has only a few $100s of upside left. You said 2,200 to 2,300. Why do you think the mining shares would have substantially more upside if the mining shares prices are usually based on the underlying metal?
Well, that's not necessarily true, and they've been able to separate themselves in recent years. The first thing is the argument there has become very, very bullish for the mining shares. First of all, reserves are down 50% in the last decade. There's a great need and a shortage of new great deposits to come online. Second of all, even at that level, and when you say, a 25% gain is still not too shabby to think that that's what gold can go to, but for producers, almost all of that falls to the bottom line now. So they'll see a much better percentage return if that happens. And if that's the case, they still can double or even triple. And doubling or tripling in a couple of years used to be a decent target. Now people feel that if you don't do it in the next day or week, you're underperforming. But I still think there's substantial upside. And there is the opportunity to go past the 22, 2,300. We'd have to see certain dire things get worse. But for now, I think that's a good target to have.
Yeah, you're right, Peter. Usually in a bull market, the miners have more leverage and they outperform. I've spoken to executives of a few miners. I won't name which, but some of them have lagged behind the precious metals last year. Usually when that happens, Peter, as an investor, what kind of questions would come to your mind?
Well, sometimes it is their own performance, but more times than not, it's a very fragmented industry compared to when I used to be very active in it. It has a lot of competition that didn't exist before. Start with cryptocurrencies, go over to the pot stocks, go over to the fact that we've never seen such high complacency and so much enthusiasm in general equities. So there's been a lot of competition that those companies have had to compete against, and that may be, and it's also very hard for them to communicate now. Not only has the pandemic impacted their way to get new investor interest, but it's become very difficult for, say, Canadian-based companies to get U.S. investors involved, regulatory and otherwise, has prevented that when it didn't exist 10 or 20 years ago. So they still have a lot of challenges to get their fair share of recognition.
Okay. Now, you showed me this chart like to show the audience now. It shows the gold price versus the S&P 500 total return index over the last 20 years or so, since 2000. And this chart, during that time frame, as we can see, gold has substantially outperformed the S&P 500 index. First of all, why do you think this has happened? And what's the significance of this chart, you think?
Well, I think the latter question is the more important one, and that is, and I use it for two reasons. I suggest to people to understand that here in the U.S., 2/3 of those giving financial advice now have only been licensed since after the new millennium started. And so for that reason, they really only withstood a financial crisis in 2008 and a very sharp blip down last year. Other than that, it's been a one-way street, and it's been basically a bullish environment. And if you took a poll to most of those same advisors and asked them, what do you think has performed best since the new millennium started, stocks or gold? Almost all of them would say stocks. And yet the real truth of the matter is gold has outperformed it. But it also takes me to the other thing that I speak about gold. Gold is kryptonite to the financial service industry. It flies in the face of what they're in the business to sell and advise on. And, whether you want to call it a relic and the other names that have been given to it, the bottom line is it's been in a stealth bull market since the new millennium. And, of course, it's never going to receive overall bullishness from the general equity markets, because if you really believe in why you should own gold, it's not the same reasons that you want to own general equity. So I point that out to people, and to keep that in mind, that despite the feeling, especially when you own junior resource stocks, and that's usually the people that get most depressed because they tend to be underperforming more times than they overperform. It's very important to recognize that gold has still been what it's been for a couple thousand years, and that's been a preserver of wealth and really something that keeps its purchasing power.
Peter, I'm looking at this chart, and the first question I have that comes to my mind is, do you think that over the last 20 years, the time frame of this chart, do you think that our economy, our living standards in America have deteriorated?
Oh, it's no question, especially in the last several years, that we've had only a small percentage. Nothing shows it more than what's happened in the pandemic. People talk about the 1%. I really use the 10%. About 10% of the people move forward over the last 12 months or so. The rest of the crowd has fought to stay where they are, slipped, or actually fell, and many have lost businesses, jobs, careers, and their entire future. So there's no question in my mind that more people, or the vast amount of people, are worse off now than in the last 10 or 20 years than they were beforehand. So when you think about that, something has to give, David. The 90% have to catch up to the 10%. The 10% have to come back to the 90%, or they got to meet somewhere in between. It's probably the latter. Yeah. And that's why, I think also you have to be very concerned now about how far extended the general equity market is. And the view on Wall Street is not the view that most of the people on Main Street have.
There's just this prevalent view amongst investors that gold is a hedge against many things, one of them being economic deterioration. And I wonder if that's something that you have in the back of your mind when you buy gold. Do you expect the economy to perform poorly? That's why you want to protect yourself with gold. Is that why?
No, that's a reason, but it's not the reason. The reason for me to own it now is the same way I would own general equities at one time. I think it's going to be a capital gain. I don't try to get too caught up into all the craziness and all the things about it. I will say this. There's no question there's a debasing of currencies going on. There's a race to the bottom around the world. And that, again, is very favorable for gold long term as well.
I understand. Now, I have one rebuttal, just one for you, Peter, is that if you take a look at some investors like Warren Buffett, who famously doesn't like gold, he has said that if you take a look at the long-term chart from back to the 50s to now, the best performing asset is still equity. So if you take a long-term 70-year chart, the S&P 500 still outperforms. So doesn't this depend on your time horizon as an investor, Peter?
Well, that's always been an unfair characteristic by a man that deserves attention. I would listen to Warren Buffett, but for a long time, gold was fixed and didn't have that same opportunity to prosper during those time frames. But I think if you take in the account of what it's done for a couple of thousand years versus what paper money has done, because ultimately that's what equities are. They're a form of paper assets. Gold still, to me, is second to none.
Okay. So you have shifted your allocation now to more mining stocks. Are they all gold and silver mining stocks? Can you, without going into detail, Peter, can you tell us about some of the other sectors that you like?
Well, after that, in late 2019 and early 2020, I became something for the first time I never was in my then 36-year career. And I've been coined the uranium bug because I became so deeply convinced, and in fact stated many, many times over several months, that I believe the coming bull market in it will be the best bull market I ever experienced in close to 37 years now in the business. So I got very, very involved in uranium. Now I focused more on the producer side than those who like the junior resource side. But we're witnessing now, as we speak, the coming of that bull market. We're way off the lows. People are starting to recognize that the tying into my next investment theme, that there is going to be a need for more power and it needs to be clean and what have you. Nuclear is going to play a big role. And that's why I think we've just started to see the shares go without even seeing the uranium price itself go. And when that kicks in, which I don't think is too far from now, we're really going to see a move. I'm going to stay overweighted on the producers because of conservativeness and wanting to take less risk. But I think most of the things that have uranium will rise. And so I pretty well have made my bets in that market. And now I'm watching them fulfill, hopefully, my goals. And now the third investment theme that I've come to, and thankfully for someone that's appeared on your show, and it was really Kitco is for make me to recognize it, and that is the coming electrification of the world and what that's going to mean, and why I've gotten very involved in things like copper at the moment, and looking at other avenues to invest in.
Mm-hmm. Let's talk about nuclear first, and we'll get into the EV story. So currently, according to the EIA, in 2019, nuclear power accounted for 20% of electricity generation in the U.S. Do you anticipate this number to increase?
Well, it's definitely going to increase in the U.S., but even so much more around the world. And everywhere we look now, people are talking about, this carbon free, and yet everybody wants to have all these gadgets, all these electrical cars that are going to exist and all. We're witnessing now here in the U.S. that a lot of people that went to the wind power and wind tower, they can't operate because they froze up and things of that nature. So I just think there's a lot of reasons to suspect that nuclear energy, barring a very unfortunate accident again, is going to grow as a need to fulfill all this increased power needs. And there's so few, you can literally count on both hands the major producers in the world. And, obviously I will mention, because I think it's the bellwether, is Cameco. And that's certainly my largest uranium holding. But I really think that market still it's only in this, maybe the second inning of at least a 9-inning game.
That was my next question, is how you would actually, as an investor, play the uranium market. It's not a market that everybody is familiar with. So you mentioned a company. Would you consider an ETF? I know I'm looking at one, the URA, as a uranium ETF. So
you're right, David. The safer bet is, because they'll get more diversification, and Cameco is a key player in those couple of ETFs that are out there. There are a lot of juniors, and like I said, they'll rise. But when the utilities come around and recognize that they have to assure themselves of future uranium, they're not going to go and run to a company that maybe 7 or 10 years from now may eventually have a mine. They're going to want to be certain of supply. And that's why the Camecos of the world, I think, are just going to, do phenomenally well. So I personally want to error with producers, but you're right. I think the safer bet for most investors is the ETFs.
So Peter, you're now invested in the electrification of the world. That includes not only electric vehicles, but also renewable energy generation like wind power and solar power. But don't you think that these power generation sources could compete with your nuclear investments?
I don't think it'd be so much as compete. I think they'll all be part of the program in order to get us to meet the needs of this electrification. But one of the things I think is really critical is the fact that copper is the main component and the most useful metal in order to get electricity from one place to another. So I would first argue that the copper end of it is a better play before I start looking at wind and solar. But they all are going to make up and need it for what's transpiring. And it's kind of exciting to know that, because as your guest that's been on has said, it's not yet something that's in the investment domain, just as uranium wasn't in the investment domain a year or so ago. And only in the last few weeks have we started to see news stories of various people saying, hey, it's time to be involved. And I think we're going to get to that on the electrification end. And of course, you invest on the basis of hoping that something's going to happen, not wait till it happens, because then you can never buy it at what you see it at price now.
Okay, and and you said copper is your preferred play for the electrification angle.
Yeah, no question about it. And there, as has been pointed out, it's going to be very, very difficult to find the high grade copper that's going to be needed to make mines profitable, and for companies to go and spend hundreds of millions, if not billions of dollars to develop it. And so I think the few key copper projects that are out there, I think where you look is going to be critical. I think that's the same for gold and silver. It's become very difficult to be a miner, period, in many parts of the world. And I think we're going to find ourselves back in North America again, Canada and some parts of the U.S., not only for gold and silver, but also for copper. And, places like Arizona, I've invested quite heavily in a little junior called Arizona Metals. But no matter what, I think it's going to be important where they're looking for it as much as what they're looking for.
Peter, I want to go back to the gold versus S&P chart one more time. Now, it's true that over the last 20 years, gold has outperformed the S&P according to the chart. But suppose you remove gold and overlay with crypto. Well, Bitcoin has really outperformed the S&P 500 over the last, well, not 20 years. It's been around only since 2010. But just since 2010, it's really outperformed the equity. So what is your view on cryptocurrencies? Have you looked at it as an asset class? Have you considered it seriously?
Well, I've taken the Switzerland approach, because if you aren't a roaring bull, or worse yet, you make a comment that may even be negative, a cult-like group comes after you. And I truly have been. It is not something I felt that I had an expertise in. It's probably one of the main reasons I didn't get involved in it. I congratulate those who have. It's been a wonderful performer. But one of the things I learned after 37 years, Dave, is it's an attitude of, what have you done for me lately? So with Bitcoin at 50,000 now, and copper, and gold where it's at, if you took my child and said, even though she's grown, and said the only way you get it back, which one outperforms over the next 12 or 24 months, at the risk of being attacked by the cult, I would take the copper and the gold. Doesn't mean Bitcoin can't still go up, and cryptocurrencies are definitely here to stay. But the one shoe that hasn't fallen yet, that if I am a bullish cryptocurrency person, that I would be at least mindful of, and that is regulatory. We're starting to see in recent weeks and months several regulatory people starting to talk about Bitcoin in a negative way, and that's its last hurdle to get over. And is there a shoe going to drop to where they get to the point of saying, no, we need to basically hurt Bitcoin in order to do whatever their own plans are for currencies and all? I think that's the last hurdle. And so if you have these huge gains that many people have and haven't taken them any, if I may say this, and if it's not good, you can cut it out, but there's an old saying that I think is appropriate for Bitcoin holders now. Hey, listen, there's bulls, bears, and pigs. They each have their days, but eventually the pigs go to the slaughterhouse. And I've seen too many people have huge gains and never take them and regret it more times than not. And that would be my only caution that I would have for Bitcoin shareholders.
You have a wealth of wisdom for investing, so it'd be foolhardy not to at least consider what you're saying. Finally, so for the final segment, I'd like to just sort of generally get your take on investing, so to speak. What is Peter Grandich's philosophy on investing? What has made you successful over the last 37 years of your career? And if a young investor were to enter the space, somebody in his 20s, perhaps early 30s, and he has a little bit of money to invest. I get these questions from my friends all the time, people in their 20s asking me, David, I just got some money from from my work or from an inheritance? What do I do with it? What would you advise them to do?
Well, after 37 years and losing more money over those time than I ever imagined as a young man in his 20s at one time that I could have, I would tell you that for me, it took serious loss, serious battles with depression to the point where I realized that money wasn't going to be the answer or my God, which it once was. So the first thing I would just tell them is you have to make a decision on what's more important in your life, a few extra dollars or peace of mind. There are a lot of people with a lot of money, but still have a lot of problems. So money doesn't necessarily mean all your answers are going to be answered by having more of it. Having said that, I think people need to understand that these are very, very matured markets. You could argue that it can be sustained because the Fed's going to keep printing money or stimulus bills, what have you. But it's hard to argue that general equities or bonds, for that matter, are undervalued or fairly valued. Can they overvalue and just continue going on? So I would just tell them that don't think that everything is a boat, which means if you don't get on, you've missed the boat. No, there's no boats in investing. They're ferries. When one ferry sails, another one will come in. So I would just err on the side of caution right now. And I would try to be an expert more than 6 months or, before I think I know everything. And experience is the best teacher. And the best line that I can say, and it wasn't for me, it was from my mentor way back named Peter Grandich. He used to say, once is an experience, twice is a mistake. But many times in the markets, you don't get a chance to make a mistake. So again, I think I would err on the side of caution at this point.
Well, how can a new investor educate himself? Not everybody has a background in business or finance, but they're still interested in investing.
Well, one of the things is learning. You have demonstrated, and listen, I don't have to brown nose you. You know that. If I never was on again, I'm grateful to be here, but I won't lose sleep. But watching a program like this that demonstrates having numerous people, that a guy, even me, that's been 37 years and can basically handle his own investments, still watches a program like yours, that's a teaching point. And I think they need to identify more teaching points like yours. And follow it for a while before they go out and, go crazy. And many times, in a sense, paper trade. Okay, this is what I would do if I had my money today, and see how it develops. If you're in your 20s, you have a lot of time left. Don't feel like time is an essence. And I just think, like I said, and the biggest line I like to leave people is, remember, the ultimate crime in investing is never being wrong. You might not think when you watch some of the financial network as any of those people have been wrong, but trust me, I've been wrong and so have they.
Yeah.
It's staying wrong. That's the big tough. The biggest separation from winners and losers is people always complain, Dave, hey, you guys always tell us when to buy, you never tell us when to sell. I'll give you that advice. You start thinking about selling when you couldn't first buy it today at today's prices. And if you can't buy it at today's prices, then you have to ask yourself, why am I staying in this investment vehicle?
All right. So final question for you, Peter. You said you've made a lot of mistakes over your career. Well, everybody has. What's one mistake you've made that you wish you hadn't? What's one thing that you've learned from that mistake?
There's too many to imagine that, but I think it comes to, there's an old saying Mark Twain said that you never have to worry what you said if you always tell the truth. The moment you feel somebody hasn't been truthful to you, you need to put up a big flashing yellow sign. And it's very hard to find truth in a world full of people caught up in what it is today. And when you can find someone as valuable as I've told you off the air, a few of your guests to me, even after all my experience, it become very valuable to listen to. Cherish that and soak all of it in that you can, because that is a gift from God.
All right. Peter, well, thank you very much for coming on and imparting your wisdom. You're welcome to come back anytime, and I look forward to more of your updates.
And anybody that has any Bitcoin complaints of what I said, please send them to David.
I get enough of these already, Peter. Peter, send them back to Peter. No, I'm kidding. Peter, that's wonderful. Thank you very much for coming on. We'll speak again.
Thank you, David. God bless.
And thank you for watching Kitco News. I'm David Lin.